Just give me a sec, guys, while I get settled in. Just want to grab some of the stuff. Let's have a look what's going on. Let me just get the YouTube channel as well. I'll just post this for those people who want to look at YouTube stream. Where am I? Here we go. So the YouTube channel's there. I might just put some gentle music as well. It's going to be an interesting ride. Okay, so that's the YouTube channel there, and I'll just put in the description as well. Okay. All done. Cool. Welcome for those who've joined me, and let's have a look at the scenarios and what's likely to take place. This chart is very familiar with a lot of people. Let me just get rid of these lines, and you can see I've got some moving averages that are pretty important. And let's see, that's the daily chart. Here we go with the channel, the macro channel. Just give you a reference point, what's going on there. So it does look bullish, and if you look at historically what we've been going through, and I'm hoping you guys can hear this, what we've been going through historically is bumps along the way. You know, in this bull run, in the past, you would have seen it with many people if you watched them present the information, that we had big drops. Historically, they were like 38% there, 36%, and so on. Right, so that's a parabolic run. And what's confluent with this chart is that the moving averages were underneath, and then we had the moving averages on top. So this is where our concern is. This is so the orange is a 200 daily moving average, and that's significant. Okay, along with that, we have our indicators. So let's have a look at our indicators. I'm going to switch to weekly, and we're going to have a look at what's important. And what's important with the RSI is the 50 moving average, the 50%, and you can designated by this white line. So this white line here, let me just get rid of that. So this white line is our changing trend on the weekly. So we haven't changed trend, but whenever we lose the 50%, we drop more. Okay, so let me just put that line there. The blue is going to represent 50% each time away. So every time we drop below the 50%, we have a big weekly changing trend. Okay, so let's see how that represented. Let's get rid of that channel for the time being. And you can roughly say every time that 50% changed, we had a big change in direction. In this case over here, we went for the bear market. Here we had another big drop, and here we had a change in direction. So the 50% signifies, with the RSI, the macro trend. But it's not going to help us here waiting for a week. What I noticed here is that we've got this crossover on the Phoenix, which is not good, but you can see how high it is away from the 50% as well. We've got the weekly macro the MACD crossover, which is bullish. So what we're having now, I mean, like, if you look at the people, and some of them are just ridiculous comments, where we have a bit of a stumble and then it's all negative. It's like, well, how much stumbles did we have here? We have 1, 2 there, two. These are 2 weeks right here. So my guess is that we're going to have a 2-week stumble. And I did say this before. See, these 2 weeks, I reckon we're going to have that. Because when you have a big drop, the momentum is on the downside. And it's going to be very hard for it to hold this level. I do believe we've gone through a bit of I suppose, a fake out in a way at the last moment. So right here, I did expect it to drop. So let me go down onto a small time frame. So I was, in my previous streams, I was always saying that I was bearish, and especially I was pretty close to being bearish there. And what I usually do is I count 3. And this is the 3rd one. So that was pretty much bearish. But on a smaller time scale, I had a different thing going on. And irrespective, this is the bearish component. So if we look at this on the biggest time scale, here's where I thought it was a bit of a fake out. This part here. I think that this part here overperforming was to collect liquidity. It should have come down here, in my opinion, and do what it did then. But what they did is they pushed it up because this was obvious, so they pushed it up. And why I say that is because right here we were very low, bearish, and somehow we just made it across. Now that's just an opinion. There wasn't anything significant there, but anyway, the whole point is the bulls played the game with us, and now we're here, and what they're looking for is liquidity, cheaper coins, and what we can reflect is from the past. So what we can learn from the past is every time there was a big drop, see this one here, we had a big drop and a big wick, but you can see as soon as it hits the spot, we have another drop. I do expect something like that here, and it's happening. I wasn't sure if it's going to take place, but it did. And let me just turn these notifications quiet. Okay, so the 200 moving average was the important part on the daily, and that we just lost that, but we might lose it for a short time. So if we look at the previous drops, here, for instance, let me just change the color. This is the lessons that I'm thinking of. So this, from here, we drop, and then we have a bounce, and we have a deeper drop. So basically it's a B, C on the macro. Similarly here, we had a drop, and another bounce, and a deeper drop, and it's good. What they call bloodletting. And so what it does is it starts putting people with money to buy up, because there's an opportunity to buy cheap. So every time you look at the past, have a drop, and then from here, you have a drop and another bounce. So here was a double bottom, and it just repeats, a drop and a bounce. So it never holds that level that you expect. So the question is, this drop, is it going to drop a double bottom, or is it going to go down further? That's the mystery. We don't know that, and no one's going to be able to tell that. And that's where you wish you had the money. So if I was you, There'll be my stop loss there under this line. As soon as it goes below that, so you had your warning. So let's have a look at it. So right now, this is a clue right there. Now put your stop loss underneath it, because it's likely. So this is let's go into a smaller time frame. So let's go in real close. So what we had is pretty much this. Trying to hold it, bounce up. We actually thought this was going to go up. So we had a breakup, and it was a bear trap. Sorry, a bull trap. So that was a bull trap. Even though sort of lines up there, it is a bull trap. It was a good opportunity to short, and there would have been a bearish divergence there if we look at it. So the MACD is slightly bearish divergence. But the thing is, this basically a spiller. And what happens is usually have two spills. So in my opinion, we're going to have a smaller version. Don't know what angle. Could be a slightly lesser angle. And we might opportunity to get short there. That could be an opportunity to get short and spill again. That's my opinion. That we're going to have a spill. So usually have two spills. And what happens with the two spills is you get a formation of some sort. Let's clean that up, make it clearer. And how do I tell you that story? It's usually the spills will usually give you a formation of some sort. Let me see if I can pick a good one. Where's a deep drop? I think so this is, where are we? Let's go into a bigger time frame. So I was always comparing this potential. So that was a 20% drop. I think this was from there to there, a 27% drop. So let's use that as an example. That was a good example at a key level. This is a key level. That was a key level. And when I say key level, it's a Fibonacci level. This was, I think, the 1.272 level, and then the 1.414, and then the top one was 1.618. Look how I memorized it. Bloody study these bastards. But anyway, so here, so we can't use this part of the model, but we definitely can use this part here. All right, so we drop, we have a double bottom, and we go up. If you look closely enough, you can say that is an angle. Okay, so that's one. So from the top, you get this bounce, drop, and you get the second one, ever so small, and you get it. So when it drops a little bit, tries to hit that, gets the resistance, and then the double bottom. So, and then what you do is you get that pattern. So you get this pattern, which is roughly an ugly wedge, but it is. All right. So this behavior. So what happens is when you have a big run up, the first one, when you have a big dump, it's the clue that you're going to have a reaccumulation structure. When there's a big dump like that, it's a signal that you're going to have reaccumulation. This reaccumulation is this formation. There could be many different formations. If you look at the Wyckoff schematics, there's about 4, but there's more than that. But it's very hard to figure out what's going on. But it's a continuation pattern, which is basically, that's what it is. But here, it's just a pause, and in this case, it was a wedge. But what I'm trying to highlight is these kind of formations, sometimes there's a 3, and a little one more, and then up. So in this case, there was two. And I'm thinking, in our case, here there's, you can see in this one, you got one there, and you got the one little one there. And again, you have that wedge formation, and then up it goes. So it repeats itself a lot. Sometimes they're big scale, like this one. So this is the problem. What scale are we looking at, and what level? And I've covered this previously, so let's have a look at it from this perspective. What's the local information? Okay, so it's not a hard one. You get your Fibonacci, and you get your key levels. Okay, let's just clean it up a bit. All right, my blue lines, I don't know where they came from, but I hope this guy's helping you out. If you've got any questions along the way, just let me know. So, just going to use our imagination. We can see perfectly that Bitcoin, if we use this reference, you can see when price hits that fib level here, perfectly. Comes down, previous fib level, holds it, hits that fib level, does a bit of a performance, you get this little wedge, and then up it goes again. And what we've had is about one bounce, two bounce, and I thought this was going to be it. But it looked like a continuation pattern, so it went up again. But this trend line is what we are, and you can see how they found support, and then you got to see it, right? Look at that, resistance, support, support, support. There you go, resistance. Previous support becomes strong resistance, and so we are going to come down. I don't see it. It's got to be a real a bullish play to break this, and that's not a big drop to do it. So what we want to do is look at a small time frame for that. And what we want to do is, oh come on, give me that break. We're going to look at the local from that spot there. We're going to localize this impulse and see what we can see. Right. Don't need that line anymore. We can get rid of these. So definitely a shorting opportunity that was arisen. It's actually done a double bottom here, so it wouldn't surprise me that. See how I got this impulse? Let me figure this out a bit. So we did from the swing high to the swing low, and then we found our level. So let's just adjust that a bit, make it fit into the price range. I had my charts before. Maybe I'll look at another chart. Give me a sec. See if there's another chart. I don't have to redo it again. Was this the one? No, that's not the one. Give me a sec. One more look. Check. See USDT. See if the other charts. But okay, so this one had it. And so let's go with this chart, because I've got all my lines. Let's just go to the 2-hour chart. Now let's hide a lot of the stuff that you don't want to see. So you can see that there was an upward channel. That line pretty much represents that, and downward channel. So basically there's a lot of confluence, and basically this resistance channel or this resistance trend line played its role. And where's the other one? And what I did say in the previous stream, if I turn my weekly moving averages, that's a 10, that's the 20, that's the 50. And so we've got the 200. And my point was, and you can see where I got the resistance as well for that. So we've got from the macro level, from this impulse, we found that this yellow fib level plays confluence along with. So what we do is we add another one to the top, and then you'll see some of these lines that they get respected. And what we have is, in general, this blue band, that's what I narrowed down to, this blue band, that if you look across, historically, played support along the way. Here there's the resistance, support, resistance, and support, support, support. And that's why this wick came down. This wick found the 20 weekly moving average to be support. This is the 10 moving average, and that's the 50. So now you can see why this box is where you buy. Okay, just too much data telling us that this is a strong support level. If this doesn't hold, you should have your stop loss underneath it. Underneath this fib level. It could wick pretty quick. So what I'm saying is, when I say put your stop loss, you got to be careful it's not the wick. You need to make sure it's a candle, maybe a 1 hour candle or 2 hour candle that's staying below and closing below. So I would say if a 4 hour candle closes below that, then it's going to go likely down. But you've got to watch a candlestick combination at the time. It's not easy, I suppose, but you just got to have a method of knowing what's bearish and bullish at the time. Give me a sec. So my buy zone is here, which is between 42,000 to 44.5. Didn't quite get there yet. So we've got a wick, and I think that wick pretty much touched this blue one, which is a 50. The 50, which is usually a strong level to buy. Are you in Australia? Yeah, I am. Hello, El Salvador. Yep, I'm in Australia. Prison, Australia. COVID prison. Stuck in the house for weeks. I'd rather be in El Salvador, mate. That's for sure. So this, like I said, once you have a lot of confluence with moving averages, previous price structure, so you can see here, even there, slightly a bit lower, we had resistance as well. So it's a band, and you can't nail it down to one. And we can see resistance here, resistance, support. So this band is very significant, and this is where you buy. If it comes there, I don't think it will come there. What the whales do is they front run it. It's either going to be before or it's going to be after. It's usually not there, unfortunately. So what you should do is start averaging in. Average in, average in. and just hold. And if it drops further past this level here, and I think that's what I got is 40,000, exit. That's very bearish, because what it does is now it's changed the what's the word, the trend structure. All right, so this level is basically gone bearish, and it's likely to come down much more to this level here, which is significant. So I would be buying here, and you will at least get a bounce. Now the question is, where would the bounce go to? It's likely to be resistance here at 47k, because we had a resistance here, but we need to see the formation take place, right? So if we see, and this is all about observation, if we see some reaction type of play, remember I was talking about different plays, and then it drops, we might start seeing a channel of some sort or a wedge of some sort, and then what we're looking for is a bullish divergence. Somewhere around here, in here, there should be a bullish divergence for you to jump in. I don't think it will be a quick move. I think it will just, the bears are on top of us at the moment. They're pushing it down. The bulls will come in. The bulls are waiting, because this is no man's land. It's stupid, but that's what it is. And you can see that it's taken time for it to come down. Just a grind. And the alts, as the alts are going up, it's basically taking away its power. So it's going to drop. If that makes sense. Oh, same. All right, let's have a look. Oh, you can see here. Okay. Okay, now let's look at this. So does that make sense to you guys? I'm trying to make it. I'm going at my pace, but I'm not sure if it's too quick or too not. How can you use the 20 weekly EMA on 15-minute chart? Okay, this is, I think it came in a few months ago, or maybe 6 months ago. You put your moving average, you put your 50 moving average, and what doesn't matter what time frame you're in, you select your time. It's always going to be, if I go to a 4-hour chart, it's still going to be if you leave it the same as a chart, then this will go to that, it will flick. It will flick to the 2-hour chart, the 50. But if I leave it at the daily, it's all, no matter what time frame I go, it's always going to be the daily. So hopefully that answers your question. Let me have another look. Simon Sydney. Oh, hi from UK. G'day guys from UK. Whereabouts in UK? Manchester. All right. Oh, thank you for that. So let me look at this scenario, and this is the scenario that I'm looking at. I do think this is, let's look at it closer and just zoom in and zoom in. And you can see my white line is very confluent as well. So it's just there, it just works, and you can see I just did it. I didn't have to draw that. I drew it initially, and it's still there. So what we have here was a clear wedge. And when you have a wedge, this is what stuffed me up a bit. When you have a wedge and you have a breakdown, it doesn't drop like this. It usually goes and then tries to hit it back, and then you get a warning, and then it drops, and the target is there, and the target is there. And what did this one do? It dumped. So this wedge was nullified, so it had nothing to do with it. Then we have the bigger picture, right? So let's clear all this. And I think I could use this. Should give me the tools. Doesn't give me the tools to draw. No, it doesn't give me the tools to draw at all. That sucks. All right. We can get rid of that one then. I'm using Explorer, so that doesn't help. I'll clean all that. If we look at the bigger picture, so what I'm doing is I'm looking at structural targets. And what I mean by that is, if you have a structure and the breakdown of that structure, it usually has a target. So an example, if you have a wedge and you have something like, I don't know, like that, then usually that's the target and that's a target, that range. Because what happens is it goes back to where it started from, this impulse. Usually that's where what happens. So this line that I have, that's a target and that's a target. And that could be possibly a target as well, depending on the formation. So it's not easy to figure out what the formation is. There's two scenarios on this one. Let me just clean all that. Let me have a look at it again. It's been a while since I looked at it. I had this target, a broadening wedge. That was a broadening wedge. And you can see how if you do your A, B, C, D, E, it works out. So I believe, let me see, that's A, B, C, D, E, no, that's E. So that was one of the targets, and that could be the possible target. So it works out again, the same. Right there, that's where the wick got it as well. So is this going to do a double bottom? It's likely to do it, but again, so we've got that range. And we've got that range from the fibs as well. Again, and we've got the moving averages again, all giving us the same business case. So I do believe it's going to come down. Minimum is 44K. And if they push it enough, probably 42K. Again, I still come up with the same conclusion. And remember I was talking about the grind and the drop? So that was the grind, and once it dropped out of that, you can see ever so, look at it closely, if I put that line there, you can see that line had meaning, because this is how I'm trying to say it. When you want to know confirmation, if price falls and then respects it, that's confirmation. So what I'm saying is this yellow line is significant because when price went back up, it recognized it and went down. And here's another one. So this is basically a bear flag. That's our A. That's our B. Now we can have two. We can have one is like that, and the other one further down. Now let's use the Fibonacci to work that target, the two targets. From swing high to swing low to swing high. So the 0.618 is about 41.5, and the 0.382 is 43.5. So that is another reason. The 618 is likely to be, it'll be nice, the 618. If it goes past the 618, guys, get out. That's all I can say. Because the 618, as you know, is always the golden ratio, and this move of our count ABC correction, it's meant to be a correction. You can have this correction with a double bottom, or you can have a deeper correction to the 618 or the 1. It's possible that the 1's still possible as well. And let's look at the worst case scenario. Yeah, so the one is definitely there. And you can see, I don't think it'll get there. But guys, if there's a case where, and you can see that makes a lot of sense. If that means that we're going to go down like it's the bull market's pretty much finished, I think, if we go down there. So if we go down there, it's pretty much, that's why you want to get exit. You want to exit here, and it will be a shit recovery from that point onwards, and that will mean that the bull market's over. But I don't think that's going to be the case. But the bulls do definitely have to jump in here. But you should have an emergency plan, which is if it doesn't hold, you exit. You don't want to leave it to the last minute. So you want to, while this happens at the moment, we have a bit of it's still a long way to go, right? But what happens is when certain key levels break, it collapses quick. And Bitcoin's known for that because the key levels. As soon as the key level is broken, stop losses are triggered, and it's like a deck of cards. It just flows because that's where people put the exit zone. Okay, so that's what I have at the moment. Moving averages, confluent, macro, fib level is all pointing to that level there. These lines still could play the role. So let's get rid of that and back to. So when we look at this, now let's look at the bigger picture. What's happening? Right. So this line here, let's see, which one's that? A 50, that's a 32% right there. Right. So that on that channel, it's the 38, yeah, well, 38% channel, the 0.382. Even that goes through there as support. So it's gonna, if that fails, that's definitely a bearish sign. And so there's a lot of a business, even that macro channel tells you to buy there as well. Now let's look at the indicators. So we looked at it from a price perspective, Fibonacci, moving averages, and you can see how all these moving averages are converging to this spot. Actually, one more thing I want to do. Give me a sec. Let me add. What I'll do is I'll go to the 8 hour. I'm just going to, that's the RSI, Phoenix, MACD. I don't need the MACD. I'm not sure I don't need the Phoenix at the moment. So this is the volatility. And if you were watching it at the time, volatility was dropping, and bang, the move came. So that's a good, and it's either price was going to go either up or down, and obviously went down. Now volatility is dropped right back down again. So our volatility is really come back down, meaning that there's not much price movement, and it might need to come all the way down here for the next move. And then you look at the price. In terms of the RSI, this is the 8 hour. In the past, we had much lower values, even this one. So this tells us, we lost the 50% on the 8 hour, and we are likely to go down more for that bounce. So the RSI is telling us that we've changed trend on the 8 hour. If we look on the 12 hour, we're below as well. So the indicators are supporting the fact that we got downward pressure. And you can see how this was a fake out. The RSI is telling us it's a fake out. So that price, that last bit was a fake, like it was up and then down. So that was a fake out there. That's why I was thinking, nah, that's not, it doesn't look natural. Basically, a fake bull breakout. Now we've gone down past the 50% and it's likely to go down more. So that's the 12-hour chart. And here is probably an area that we're looking at. So when price comes down, it's probably good to look at certain time frames on the RSI to give you an indication that the support level matches the RSI. Okay, if we look at the 30-minute, it's actually a bit of a bull. This one's actually a bit of a bullish divergence taking place. So that was a dump. That dump was really extreme. Went down to 9%. So that was a good buy. And now we're looking at, actually you can use the RSI to go along as well. Let's look at 1 hour. I usually like the 1 hour. And the 1 hour is finding support on this level here. We'll see about that. So there might be a bit of a bounce at that level. Let's look at the 4 hour. The 4 hours pretty much, yeah, it's finding support. You can see the bullish divergence is coming in, but it doesn't mean it's going to kick in straight away. What you see here is, I'll give you an example. Price is dropping, but RSI is staying flat. That's a bullish divergence. Price down, RSI flat. This one here, price coming down, RSI flat, bullish divergence pushes it up. Similarly here, price coming down. This one's actually on the incline, and that's why we got that push up. Last little bit of fake out, then up. So the RSI can help you out in a fair bit where to buy. So if this was to drop, if it was to drop, I would use this RSI to see how far it's dropping. Just to give you that extra information about if it's the right spot to buy. And what I expect in many cases is a formation taking place for a reversal. So here we had, you can probably say, for example, there, put a straight line. As soon as it break that level, it's bullish, and it's a 50%. So at the moment, this is very bearish actually on the 4 hour. So then come up to that level. It's actually used this level as resistance. So you can see how that works. Now the question is, because that's such a nasty drop, it's really hard to use the RSI in any significant way, because the others were predictable waves. This one is just a dump, so it's this one of these ones here. So you want to see this, yeah, actually this is a good one. You want to see bullish divergence. So this one here, we had price drop, and we had bullish divergence. That would have been really nice. Even though that's a bit of a drop, here is a bit of a tricky one. There was no bullish divergence. It's actually the RSI represented price. So it's just the last bit was bullish divergence right there, where that was flat. And then actually you can see how this channel actually played a good role here, right? It looked perfect. Here it didn't quite look clear. Here it's played a little bit right there. So that line could make a difference. So that price coming to this level, I think, is 42,500. I would just place a buy order there, just in case it gets there. So this weekend is definitely, I think, is like to go down. It's not going to go down quick because it's a bullish market. Whenever there's a bullish market, it doesn't go down quick, especially when you have a big dump like that. That's um, that's basically a capitulation. That's like they've got rid of a fair bit of cells. There's not much left to shake the tree. To shake the tree, you need to push it lower. And I'm not selling. I sold my alts, but I didn't sell my Bitcoin or Ethereum. So I'm going to just hold those until this tells me to get out. So the alts might just recover a bit while this is going sideways. There's an ever so possibility that this level here could be it. It's hard to tell. You just don't know. So let's have a look at. So when it comes to that, I'll look at the Phoenix to give me a hand. Let's just see where the momentum is going. So I'll get rid of that. Now the Phoenix is pretty much downwards. Everything is below 50%. There's nothing in the near term that this is going to go up. There's nothing there. The energy is not there. Energy momentum. Nothing's telling me it's going to go up easy. Not yet anyway. So wait for the next 4 to 8 hours actually to give us any clue. The 200 moving average is the concern. That's what concerns me, is that if we close on a daily below this 200, what would it mean? It is a bearish sign. So when we look at the 8 hour, look, the RSI has gone below the 50%, both of them, and the moving average for it as well. So the 8 hours dropped. Even the 12 hours about to drop as well. Actually, this energy is coming back up. So there's a bit of a bullish divergence on the 12 hour. So that's good. And then if we look at the daily, no. So there's not much. But you can see the daily is really extended. So it's likely to gain momentum. But by the time, now if we get a good candle here, this could actually be a reversal on the daily. So the one daily candle could do the job. We have to yet to see that. So this daily candle, so you can see how it's not capitulating. Look at these wicks. Here's a story as well. Let's look at the candles. It's not all about levels as well. Candlesticks tell us a story. So here, this is a daily. You can see all these wicks. That tells you there's a strong demand buying. Those wicks, all telling you that this is a demand zone. And then we have these wicks, demand zone, and therefore we had that bounce. Here we don't have any wicks, which tells you that this is a strong level of support. There's no wicks, just bottom cut off. That's why the wicks are here, slightly above it. So this level is strong, right there. There's no wicks in this area at all. The buy demand is with these candlesticks here, and that's basically a strong level. So average yourself in. So I would use the top of this, where is it, 43,700 is my average in. And if it drops a bit more, buy. That's how I'm looking at it. And it's got confluence with this structure. Right here, this is a lot of traffic, and this is going to find potentially another thing. So let me have a look at that. So from a big picture perspective, what are we seeing? We are seeing we had it. We had our A, B, and all the way C correction. So let's get rid of a whole bunch of moving averages here. That is, and a lot of people agree that this was wave 3 to 4. So hold on. So so that's wave 2, that's wave 3, that's wave 4, and wave 5 is somewhere up there. Okay? And that's why we're talking about wave 3 to 4 has this massive correction, and it was the 1.618 from swing high to swing low, about 1.618 right there. Okay? There it is. So that fits within the correction. So if that's the case, then we have the last Elliott wave count. So this could be our 1, 2, 3, a bit of a 4. We're talking of the micro here. And then 5. And then another correction. Potentially. Or on a bit different macro, this could be the 1. And that's going to be the 2. For them, you know, if we're looking at a real big move, this could be as well. So even though that's bearish, a big bearish candle, I don't see it going down far. What we can do, let's have a guess. Let's do this. Let's have a, that's a bit too big. And if I make a white, yellow, maybe of that some sort, we can have a formation like that, where it just hangs around for a few weeks. Could go sideways like that for a while, and this could be our range, pretty much. That's our top, and this is our bottom. And like I said, this could be a reaccumulation area, and then up it goes. So consolidation under major resistance. So this is our major resistance. We have this consolidation. We get maybe 1 or 2 touches on the bottom. This could go sideways for a while because you know why? Because a lot of the alts are doing the same as well. So if you look at the alts, let's pick an alt. Probably a better alt. Let's see, what can we pick on the daily? Bit of a pullback for Algorand. Let's have a look at EGLD, I suppose. That's another one. Actually, we can do on this one. Doesn't quite do it. That's a daily. Let's look at the 12-hour. No, that doesn't quite help us there. Let's see, that comes to mind. What comes to mind? Actually, Ripple was on it. So Ripple, for instance, is in the reaccumulation zone. If I was to, got interrupted a bit, but it's still all right. So right there, and this is Ripple's reaccumulation zone, with the assumption that we're still in a bull market. And you can see how, bugger, got to keep changing colors from different backgrounds. So realistically, the path you see here, big pullback, and you get this triangle formation, then another peak, and then the bottom. It's a shakeout, and and then we'll have another, and off it goes. So that is a reaccumulation formation, similar to here, bit of a shake like sideways. So when price goes up, you have on the way up, you have a sideways movement, and then you have the next purge. So we had this nice run for Ripple, and it's just natural for it to go sideways before it does a continuation, with the assumption that we are in the bull market. Otherwise, this is going to be a reversal. So when you look at the alts doing something like that, and I'm sure there's much more, if we click on them, that's not a big one. Ethereum's a bit nasty, and I don't know why I'm not getting here. Okay, so Ethereum went, it did its reaccumulation. You can see that. Ethereum had this level of reaccumulation, but it was very, very bullish. It didn't really go wide. It stayed here for a while, but you can see how it tested this bottom range for a while. And it tested the top, and when it was ready to go, it broke out of it. Now it's roughly come back into this zone. So it's a bit nasty, but if Ethereum could hold here, that'd be great. I would use this level here as a range. So Ethereum's actually dropped down a fair bit, much more than Bitcoin, I think. And it's doing what I think. So yeah, I think Ethereum will stay above that. I think this is Ethereum's area, because that dump was enough. So I think Ethereum, that's your entry point right there. It's got a lot of confluence. And otherwise, if it fails there, it will come here, which is 2,900. So I'll be looking to keep it real there. Otherwise, it will just come down. ADA did something similar. So if we look at ADA, its reaccumulation, it was a bit puzzling. I've never seen one of them like that. So ADA is a bit nasty. 1 hour, no, I don't want the 1 hour. Let's have the 4 hour. So look at ADA before it broke out. ADA had this level. It had this flat level, and you can see how price came back down. So it had a few levels, ADA. And this was, so you can see maybe Ethereum is going to do this, but you can see how ADA reaccumulation was very different to the others. In actual fact, it looks like a head and shoulders. Yeah, left shoulder, right shoulder, and in a bull market, head and shoulders is really a continuation pattern. So I would put price down there where this blue line is for ADA. He might be lucky enough to wick down there, just go crazy, because it has a history of jumping down a lot. Might get lucky. So I'll look at that. This was a nice nasty drop. So here, I would actually just put a line across, and just put a price order around here. You might come back down here again. Just that $2.06 or something like that. It's just one of those lucky ones if you might wick down there and go for it. But you can see the reaccumulation structure has a thing. Here there's obviously this is a bottom reaccumulation. But this was, I thought this, yeah, actually this is just broken out of this accumulation. Yeah. So you can see how there's no trend in the reaccumulation area. It's too difficult to trade. But once you understand that it's a consolidation, price and a continuation. So Luna is going to be great. It's got one of those structures. Obviously, this one is a distribution one, reaccumulation, and there you go. So that no trend. So where are we again? Back to Bitcoin. And that's why I'm saying this was a distribution, and we had a number of key levels. So these are key levels for us, and this could be a key level. If that's not the key level, then the next one down. So to me, this is a key level, and it might stay there. Left shoulder, maybe like that, and then up. Could do one of those ones. Being bullish, aren't I? So, but definitely, this area is accumulation, different ranges, and what you want to see. So we had this, what do you call it? Actually, that's so inverted bar structure. Let's have a look at that. Is that going to help us find the spot? It's not. Let me draw the line perfectly. That was a line. There was one line here. That was perfect. So that's not going to help. Maybe it'll work. Maybe we'll just keep an eye on it. It might be the support line that we needed, because there's a lot of confluence at a few areas on this one. So this might be just a support line. It's just one line of many lines that might be playing support. So if you got enough of them, even like here, for instance, what we had, where was it? See this here? I had this line, and it was enough for me to go in. Because what it did was, it told me it was a continuation pattern, and when the price came down, a lot of people thought it would come down here or further down, and I looked at that and I go, okay, there's something holding it up, and it was that line. Nothing much more. But that line is significant. You can see that it's got a few levels of resistance and support. And if you drag it on, you can see how it continues on. And then I remember somewhere along those lines. Anyway, now that's our resistance. And that was perfect there to find resistance on that wick. So these lines make a difference as well. People go hocus pocus. No, it's just a method. The more you have confluence with other elements on the chart, the more of a business case. So right now, I get this from that low to that high, and I want to see what we got. That's what we got. So it's likely, let me see if I can adjust this a bit. Maybe that's the level there, then I'll use as a reference. Yeah, this one makes more sense. And I'll just remove the wick. Yep. So when it comes to the Fibonacci, this level makes sense. And here as well. There we go. All right, so that's pretty much it. Covered a fair bit of that. Let me have a look at what comments are. C correction might not be over. A lot of people think the latest climb is not impulsive enough. True, it wasn't impulsive enough. That was a grind at the top. I've got to admit, and we ran out of steam. This was impulsive, but then this part here reminds me of here, where each high was less in amplitude. So from this high and low, high or low, it decreased, and obviously this was the break in the trend. So this was a trend with the lower highs. No, so higher. These are the higher lows. I keep getting mixing them up, and this was the break in the trend. That was breaking the trend. That's why we kept going down. If we lose the trend, if the trend doesn't continue, then on the macro picture, so the 4 hours, that's 4 hour there. The 4 hour hasn't, so this is our 4 hour trend, and we've broken it, right? So we've broken the 4 hour trend. Let's look at the 8 hour trend. The 8 hour trend is not broken. Not yet. Okay? What I mean by that? Actually, it is broken. Yeah, the 8 hour trend is broken. Let's do the daily trend. No, the daily trend is not broken. So I would use this level is my daily trend. That's where you go bearish. If the daily trend breaks that, that's bearish. That's when you get out. So that level again justifies it by the trend. That's a higher low, higher low. You don't have to count that one. There you go. So the trend is the trend is still intact, long as this is not broken. From a weekly perspective, it has to be here for the trend to break. I wouldn't wait for that long. I'll look at the daily trend. My guess is for this bull market to continue, it has to stay here. If it drops below there, I think it's going to be something different completely. And let's put on the logs, auto. So why is this so short? I don't know. If that's the all-time high, it's going to take a while to get there. And you can see this was a neckline, and that makes perfect sense. I don't know why people think that's a bearish sign. It's not. It hit a major resistance. It's meant to. This is the top. Sometimes it might go like that, break through, but this one they're obviously going to consolidate. Problem is, it might go down rather than up. Historically, that has been the case with reversals. So if that's going to happen, so my point is, if we lose that, you can see the pattern. Even if this goes up, if we lose that, you can see where it's going to head. It's just going to find that resistance, and it's going to keep coming down for resistance. And who knows what takes place there. But the indicators will tell us from the weekly perspective if there is a change. At the moment, the weekly is nowhere near. So if we look at the weekly, I'll go BTC, USD. I'll do Bitstamp. It's way high. Like none of it. This is our danger zone. It's nowhere near it on the weekly. And whenever you see a weekly change, it has to be down here, and then you see price drop. Once it hits there, you see price drop. So we've got a lot. This is where it comes, and then you see price drop. Yeah. Now we've got a few other tools that tell us. Let me check. Let me see. This is the chart. Let me see my other chart. And I did discuss this in the past. This top one here. So I did have that line. This is the bottom for the buy, and so I'm just using the reference points in the past. This is the Maya multiple, and I think that's good enough. Let me get my glasses. What is it? So we can see here that that was resistance and support. So we don't want to see this drop below it either. So again, that comes down to that level I think we talked about. Over here you can see this was resistance, and once we broke it, you will see what happens. Once we break these levels, it means something. So now let's go back to our chart. From a Maya indicator perspective, if I was to just point out these levels, as soon as we drop below it, you can see how things actually, here's more of it. As soon as we drop past that yellow moving average, and then this is confirmation. Once we drop below that moving average, confirmation, and this is more negative down. Yep. But that same note, once we break this level, bullish, and once we break this level, both levels here, bullish, and similarly once we break that level, and so the 200 we broke there, and when we break this red level, confirmation more. Yep. So this Maya multiple does tell us a fair bit. So I'm going to be looking at this level as well. So this is the daily chart, and ever so close. We don't want to see it dip below it. Then it means that we might come back down to this temporary midsection here, right there. That means that we might come down more further down to this level to find support. So I'll be using this as a reference as well. What's the price doing right now? So what did we go down to today? Actually, let me have a look. Give me a sec, guys. I want to log back in. With my phone. Just bear with me while I just get back onto my exchange. So what was Bitcoin? Okay, let's have a look at that. Not what I wanted. So the lowest it went today is 44,700. Okay. So 44,700. So that's $600 up. All right, so that is my level, along with the Maya multiple. If we look at it, where are we? If we can see those two, that red line section, and I think that will equate to the 50 moving average as well. So that gives you an idea what's going on. Now, let me give you the good news. Uh, let's have a look. Oh, fuck, I'll log in. Just give me a sec. So I get copies of Willie Williams reports, and basically the on-chain data is everything's pointing up. So liquidity, exchange stock is actually dropping. So Bitcoin is leaving the exchanges. When we look at the on-chain data, Ethereum, when you look at Ethereum, very similar as well. So price is going up, and the supply is dropping on the exchange, or slightly going up. So his commentary was, short-term investors will continue strong accumulation. These coins are moving to medium to term investors more than long-term investors, and so on. So everything he's saying is bullish in that perspective. I didn't actually. His last one, I think it was the 10th. Okay. So this is yesterday's one, and the supply stock is pretty much, so price is dropping, and exchange flow. In other words, the coins are leaving the exchanges. For even the short-term and long-term investors, the coins are leaving while the price is dropping, or the price is wherever it is. So this is on-chain data. What they say, using supply stock model. So another one. So this basically, this is a discount. So this average line is the average price that it should be, and we're below it. All right, here obviously the price was above the average, and when it broke it, it went down. And so that's a good exit sign as well with this on-chain data. And so that's short term is basically saying leverage position. And so here is expecting 55 plus, 55K or 50K is potentially the target. Okay, so he knows his stuff, and basically, and that's why the price is not really, yeah, that last bit of Bitcoin, I think it was, that push down was manipulation, and I do believe we're in a bull market. I gave you the negative stuff just in case. You need a plan B, but in essence, I do believe we're still going to go up. Here is a good accumulation. So what it's done is they pushed it down. They're trying to get their bags filled in that range. I think that this was to scare people off, get the newbies, bit of retail, let go of their Bitcoin, and then, but they don't want them to do it quickly, right? So they just accumulate slowly. And so I think what we'll do is this area, I don't think we'll go below it, put it that way. That's why I'm going to, like, if it comes down here, I'm going 100% in. I'm pretty much confident. And I'm going to probably leverage as well, as best I can. I'm just hoping it does come down. And we'll watch it. If it comes down with small candles, and when you look at the candlesticks, they will give you an idea with the indicators if it's going to be bullish or not. All right. So I've covered that. I think I covered that enough, right? So let's look at comments. So what happens is every time a Bitcoin drops a little bit, the weak alts will drop more. And so when we look at Luna now, Luna is just one of those that's just going. So I got Luna. I didn't get rid of it. I want to see my Sol. Sol's dropped a bit. I did get rid of some of my Sol. Let me see if there's so now let's look at Sol. Sol versus Bitcoin, and Sol against the US dollar. Okay, even here you can see this Bitcoin starting to turn. Everything's starting to turn over. Yeah, it's not going to really drop much. I don't think it's just going to go sideways. Let's look at Sol USD. Because this is a great. I think you can see here. There's pretty much on the daily. There's a bearish divergence playing out on Sol when it comes to the US dollar. Look at that. That is a bearish divergence. It had to drop. And from a daily perspective, I would have used this line. I wasn't watching it like an idiot. I should have watched it. And I got the breakdown. So this is Sol's going to pull back a bit more, I think. Let's have a look. What have I got here? I don't need that, do I? So that bearish divergence is definitely playing out. Let's have a look at the moving averages. Let me just put my stuff in there. Where are we? Okay. So we haven't even touched the moving averages yet. This is probably a good time for it to do that on the daily. Let me add the MACD. Yes. I'll be looking, so that bearish divergence is going to play out. I won't be looking at daily. I'll probably use the 8 hour for now. 8 hour, no, 8 hours not going to do it. 12 hour. I think the 12 hour is okay. So what I mean by the 12 hour is now I'm trying to keep it. I better not talk too much, but let's see. Previous support. Can't see it, so let's just put the colors in. So, okay. So the bearish divergence is playing. This is, to me, a nice area right here. If it lets me draw, I think I'm just too quick for the machine. Let's just put the grey color in there. That's not working, is it? Orange, that's probably better. So that'll be my area of interest, $154. 0.618, I think, pulling it down. And so I think this might come down a bit more, maybe to the 0.5. So that'll be my range that I'll be interested in for this to pull back. But anyway, we'll keep an eye on it. The MACD, if it crosses over, then it's a bit bearish. But so what we're doing is looking for a slow descent and a bullish candle, a bullish sign, and then maybe in some cases 2 bullish candles, a combination. So, but you can see definitely the MACD, the RSI is bearish, like it's playing out. And usually what happens is, I think we had enough impulses there. So yeah, you can see that's a broadening wedge really. Maybe we might get a bit of a chance. Maybe even that might be a spot there. Just push that out a bit. Yep, that might be a chance. But I don't think this is going to be any bullish anymore. I think we've hit our range. So I'll be looking to exit, tell you the truth. So if we look at Sol, I had my Sol chart. Give me a sec. Now you're going to see a lot of lines and all the rest, but it's all around Fibonacci targets. So that's a 4.618. Yeah, but I'll put the 5.618. Did it hit that? No, it didn't. And this one here, let's leave that out. So this I had, so that could be the 5. What is it? So the 5272. Yeah, okay. So I think we're done with this one for a while, and it's just gonna. I don't think it's going to go up any further. To tell the truth, with Sol, and you can see it's overextended as well, and maybe, just maybe, this is the reason. Okay, maybe overperformance, but you can see that trend line is likely to, and it's just dropped below it, to tell the truth. All right, you can see that. So if we look closely, if it's dropped below it, it's going to be resistance. Yeah, so right there. Yeah, so it's dropped it. So that might be a signal. It might be a good signal to short, tell the truth. So yeah, it would have been great up there, perfect there to short. I think this is going to pull back a bit deep. I think it will go sideways for a while, but like I said, with the other ones, it might come down all the way here for a reaccumulation. Because this can't keep going. So there, potentially there. Let's see that. See, we haven't got a wick there. We found a support. So this might come all the way down, not straight line, and range as Bitcoin. So if Sol, or downwards anyway. So I think Sol's done, in my opinion, and you can understand why it's done so much. And it's all-time new high, so that's my thinking on Sol. Let me have a look at anything else. Some people 30k, near 30k. Nah, I don't think so. 30k. If it's around 30k, it will go down more. It's a big major trend change. So extend the lower line and see where it goes. Nah. Not sure which one you're talking about. It was off my other chart, wasn't it? Actually, what I want to do is, I don't want to save this because then I'll lose everything I've had. I'll just bring back the old one. Yeah, as you can see, this is slightly, well, maybe the MACD will give us an indication as well. It's on the daily, so we just got to see what happens on the daily. But you can see it's holding its level. I'd just like to see this go above. It'll be nice. We go above the 50% on the daily. See here what we just had a slight dip. anyway, we'll see what happens. Um, let's check out dots. Dots lost a bit of momentum there. Yeah, Algo. What's Algo doing? I think I was looking at the 4 hour for Algo. Yeah, okay, it's still all right. So Algo is paid out this bearish divergence. You can see here, like we had. So this is the 8 hour and the 4 hour. I think the 8 hour is the same. Bearish divergence playing out. Is the 8 hour the same? Yeah, 8 hours the same as well. So bearish divergence playing out on the 8 hour as well. So, and now we're seeing potentially a bullish candle, but I like I think the 6 hour. Yeah, 6 hour works. Looking at the MACD, 6 hour works. So, but maybe the 4 hours better. Yeah, the 4 hours better. All right, let's have a look at that. So we look at Ethereum properly. It's Ethereum index. Ethereum's very bearish, isn't it? That dropped more than I expected. That sucks. Ugh. Although there's a bit of potential bullish divergence coming in play, so might be a nice good spot to jump back in. Stuffed up below the charts. The confluence is just gone, except for a few of them. So FTM against Bitcoin, that looks good. Although there's a bearish divergence that played out as well. So let's look at 8 hour. 8 hour might be good enough. It's still a bit too deep. Dot. Yeah, dot doesn't look good as well. Weak at the moment. I think it'll come back down a bit more to down this level for support. Here's Miata. Missed a few shorting opportunities, that's for sure. I thought I just did that. Yeah, that looks weak as well. Although it's playing some support, bullish divergence. Look at that top. That would have been a nice. That would have been excellent. That would have been an excellent short. That one. Beautiful formation. Couldn't get any better, really. That was like perfect. Breaks there, touches there, down. Gotta be awake to see that though. What happens is with this kind of drop, your trend line it's too deviated, and you can't pick it out. So here, this one here is the 8 hour. So I might use this for instance, RSI. If this is broken, if price comes down and breaks that, I'll look at that as a bullish sign to enter. But when you do a line from this, from the top, come on, it's not easy to work that out because it's such a deep drop that this becomes skewed. But anyway, That's what it is. Just buy cash and you'll be fine. Okay. 42k seems to be more likely than 30k. Yes, I do believe that. Extend the lower lines. Okay, we've done that. H bar and I'll go. Okay. Hmm. Actually, H bar looks alright. I was looking for an entry for that, but it's got a bit of a weird shape, really. That was a bearish divergence there, that's for sure. So you got price going up, and you got bearish divergence much more. So that's what's playing out at the moment. There's no trend. The 8-hour doesn't quite. Yeah. See, it's ugly. Bearish divergence H bar. Might have to look at the daily. Let's see the daily. Yeah, the daily is probably the 12-hour. The 12-hour. Nah, this will be a daily candle. You got to look for a bullish daily candle at the moment. So after this one, you got to look for another bullish candle because the bearish divergence is keeping you out. It's not nice. The MACD will give you an entrance, but yeah, you just got to see a green candle. You got to see a small candle to jump in. At the moment, it's just there's no short time span. No, there's no formation that's going to give you a hand. It's an ugly chart, basically. Doesn't help. And algo. I'm looking for interest in algo. I was looking for it today, actually. And that was my interest. I think my interest was, I was looking for an entrance here. Let's see. Didn't come true. Yeah, I was looking here for an entrance. If it pulls back to here, I'll be interested, and it pulled back deeper. So what it's done is it's pulled back too deep. That's what it's done. Because algo's pulled back too deep. Let's look at the 4-hour. And I don't like it when it even though it meets the requirements, I don't like it when the MACD signals cross over. It doesn't. I don't like it when it does that because it means it's more likely to go sideways when I see that cross, and it might just go sideways for a while. That might be the bottom of the sideways, but I think it's going to do a consolidation pattern of some sort, arranging pattern where that's the top, and that could be the bottom right there. I think that's what I think, because look at the move, right? Bit of a parabolic move. It might just do, when I say a consolidation, it might be a quick one. Let me just change that color so you can see. Very similar to Bitcoin. So I think it could, we had that bounce. I think it could come down once more and then back up. That will be enough, in my mind, to give you a bit of a bullish formation. So I'll be looking for there. You got the 20 moving average and you got 10 moving average on the 4-hour. So this area could be a good area. Looking for some additional information. The 0.382 is that level there. Yeah, so there is potential. I just think this continuation pattern that's forming is not finished yet. So we'll rather wait for a good entry. And cash. What cash? I remember cash. I haven't looked at it for ages, and there's probably a reason for it. Yeah, because it's okay. Oh, Glassnode. Bitfinex. Ooh, it's all over the place. All right. Actually, that's not a bad formation, to tell the truth. On the 4 hour, that looks like a reversal pattern taking place. If I can draw it, I'm just not on the exchange, so but to me that looks good. Just you got this resistance at the moment, so even if it probably drops back down. It's going to be one of those ones, I think. Mainly it's been going down, hasn't it? Just by cash. Cash is shit, dude. It's been dropping for ages. It might be doing a reversal. Yeah, it's been dropping for ages. That's could be the bottom. Weekly, let's look at the weekly. Is that the oldest chart? That was hobby. Let's look at hobby against Ethereum. Might have a bigger history. No, that's not gonna help us. But yeah, against Ethereum, it's really doing shit. All right, let's look at the last ones. Let's wrap it up. Now, yeah, this weekend's going to be interesting. Was the plan B said that we're likely to hit 43k for September or lower. I think we did hit 43k ever so quickly. So what did we hit? We hit 42. Wow, bugger, 42,800. So that met Plan B's prediction, and you can see where. All right, we've got three green and red candles. Who's good at memorizing candles? Three white soldiers. Was that what it's called? Bugger. By the way, you can join and look at it. It's not all complete, the free stuff, but if you want to jump on my website, you can register and you can look at the free course material. As you can see, I'm just going through it all. Hey, there it is. That's the link I wanted. Now, free strikes. Okay, free red strikes. And so what I'm trying to do, see this here? Free red and then a green. So we've got free red, we need a green. That's pretty much engulfing this red one. Oops. So if we get something like that, that is definitely a strong, reliable move. Obviously, if we get two green ones like this, so we don't have that, or we have something like this, an abandoned baby, you know, a doji, and then that. So we have a number of we could have a morning star. So what we're looking for is a bullish setup. So this is the 8 hour. Let's look at the 4 hour. So yeah, we're looking for a candle combination to show us a reversal. Here we have, like, you know, 4 red candles, a doji or a hammer, and then followed by 2 green candles. That's a bullish sign. Up it goes. Another one here. So green candle combination like this is a reversal. So if you know your candlestick combinations at a key level, that's also a signal to jump in. So don't have to memorize it, just look at these charts, look for them. I haven't finished putting my stuff in there, but if you jump in, you can also use that as well. One more thing, I want to just check. Let's see. Okay. This pi indicator. Okay. I'll put on daily, see what it's showing. Okay. Yeah, so this is way below. This could still be a good indicator for support. If you look at this indicator, every time these buggers cross, the trend changes. So we've got a long, this, if anything, this is a bullish turn. This has come down. Anyway. What else we got? K2M. All right. Quantum. Done a few quantum trades. Quantum's actually not bad. Just that dump. That dump was bad. That's what stuffed it up. It's broken its momentum. It's like there's no flow to it anymore. Beautiful double bottom. It's like this is a perfect entry. Once you get that, yeah, that was a perfect W shape. 1, 2, 3, up. Actually, that's not a bad formation, is it? So we've got A, B, C. Yeah, I do think it's going up. But yeah, that would have been a good entry. Right now, it's telling you nothing. 2 candles. But the formation is actually bullish. When you see something broadening like that, and you've got the confluence, and you've got the 200 moving average right on there, it found support. So what we have is that as a resistance. I would trade above that. If it comes down more, I would look for this area for support. So that could be a range. Yeah, so either I think it will do a breakout trade. So if this comes up in small time frames, you look for a breakout trade there. So going to a closer time frame. It's clear. Well, this one was clear where it found resistance, but now let's find support there based on this line, and I would think this is the level that you will need to break as a trade. So if price was to come up, I would look for to break this as a breakout trade. Makes sense, because it's pretty much clear that we have a number of levels of resistance, bit there, definitely there, and so that I would count that as 1. Second count rejection, third, and then potentially up. Doesn't necessarily have to have higher lows, but just the touches. And yeah, so this is a bullish move. And basically just found it, and so the momentum might just keep going. As long as Bitcoin stays sideways, this is going to break out. All right, there you go, Brian. Give me a tip, buddy. If you make money. All right. From my opinion, it's ABC, the X, ABC, rate count. Okay. All right, I think I'm done, guys. That's about it. It's getting late. Thanks for joining me. Please give me a like and a share. Even better, give me a donation and come and join my forum or channel on the Telegram where I do consistent updates on charts. I'll slide down on TradingView. I'd rather make it easy, not much wording, and I just put in my Telegram channel. And there's two channels. One's me just posting, the other one is where we can do communication in both directions. But anyway, thank you for joining me. Have a good weekend, good trading. But yeah, be positive. If you haven't sold, don't sell now. It's not a good time to sell. Just make sure you noted those stop losses that I've spoken about, those key levels in case they drop, which I don't think will happen, but just never know. Otherwise, just look for